This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are bang in the middle of the week, Wednesday morning. We're coming to you live as always from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, morning Prashant, morning Nigel. Exciting, second half of the week, right? Given that you have the FOMC policy, but the bulls are back, it seems. At least that's what we got yesterday. Hopefully some follow-on buying today.
Solid close, guys, yesterday. And I think we got help this morning from overnight US markets as well. So I think that's the good thing. There was some confusion, hesitation late last week, but all of that completely blown away yesterday. Solid close, as I said. Mid-cap index at new highs. The small-cap index is in the midst of its 11th straight winning week. I'll get to levels in just a bit, but as I said, there's help from overnight markets once again. And the good thing about the US is that the rally, which we highlighted, a few weeks ago, was completely primarily driven by 6 or 7 large tech names. It's broadening out. So the S&P 500 is up 0.7% last night. The Nasdaq is up about 1%, almost 1% as well. Now, the big talking point was, of course, the consumer price inflation numbers out of the US, which shows that headline inflation has softened. But the problem is that the core inflation is still stuck between 4.5% to 5%. That is the problem. If you looked at US markets and the CPI number yesterday, as I did, and then kind of looked at the reaction on yields, what did you see? You saw that yields actually sold off massively. There was over a 12 basis point sell-off in yields. You go to sleep, you wake up this morning and you see that yields actually ended 8 basis points higher. So there was a massive U-turn which you saw on US yields last night. By the way, it is so much so that across the tenor, which is the 2-year, the 5-year, the 10-year, we've got what is called the bullish outside days, which basically is that the market started at one point, higher low, and then completely ended at the opposite end of the range. And this is, by the way, just going by this structure, it's positive, and it basically indicates that there are higher levels in terms of US yields which are coming. But what was the sudden realization? It was not sudden, but I think, we put this out yesterday when the numbers came out, that markets in a way recognizing that regardless of tonight's FOMC outcome, and we get that during US time, the decision from the Fed may remain hawkish in the coming months. As I said, core inflation is very much persistently high between 4.5% and 5%, nowhere close to where the Fed wants it to be. So we may get a pause today, but as many are saying, it perhaps will be sort of read as a hawkish pause. We'll see. There are still those very much in the minority who are expecting even today for the Fed to move by 25 basis points. But I think, more or less now, the consensus is pivoted to the fact, market positioning is pivoted to the fact that we will not get a rate hike, we will get a pause. A commentary will be important. Oil staged a reversal. Brent oil prices are back above $74 a barrel. We had a 4% sell-off and a near 3.5% rally. Now, let's just sort of get to our markets and levels, really. On the Nifty, it's very simple. We must hold Friday's low, which is basically where the market has bounced off this week from. 18,555 is the level. On any downsides, any weakness which emerges, that level needs to be defended. On the way up, the Nifty needs to take out, 18,788 on the way to the all-time high, which is 18,887. On the Nifty, these are all very near-term levels. You get 1 or 2 good days and you're basically at all-time highs. So you're practically there. It's just kind of biding time. The Nifty Bank closed above the 20-day moving average. We had a slip under 20-day, but as I said yesterday in the morning as well, the close under 20-day was not significant. It was very minor. We managed to defend it. We are above it as of yesterday's close. The 20-day comes in at 43,991. We left off at 44,079.80 yesterday. So that becomes the first number to defend in a way. But the recent low, which is 43,874, will be the next number after the 20, if the 20-day were to go. And on the way up, 44,500 has been elusive. It's a number we've put out at least for the last 2 weeks, and that needs to be taken out for further upsides to really materialize. SGX is indicating, I think, about a 50-point higher start. The consensus is completely stacked up in one way with regards to the US decision, Fed decision. If you get a bit of a surprise and you don't even know how markets read what Fed chair has to say, what they have on their minds, there's a Q&A, etc. as well. So things could get volatile. So I would say, if you're trading very near term, if you're making money, take some money off the table, come back tomorrow morning and evaluate what you want to do. This is purely Nifty, mid caps, small caps, etc. Of course, I mean, the momentum has been very strong, and there it becomes extremely difficult to get in, out all the time very quickly and in a very nimble way, because prices move, leaving where you wanted to get in, your entry points far behind. This is on the Nifty. I mean, if you're trading, I would say don't chase the move given what you have in terms of event risks over the next 24 hours or so. Sonia.
Oh, absolutely. And now I think the momentum is intact, right? It's in fact building up. The market knows what to expect from the FOMC meeting. After the inflation data that came through, the expectation is that there will perhaps be a pause this time around. And the market is building that into its prices as well. So today, the start is in the green. And as we've been telling you, the Nifty is now less than 1% away from the all-time high. So we are virtually there. It's just a matter of time before we get past that level. I also want to point out that if you look at the constituents, a lot of the rate sensitives have been moving higher this month. So whether it's Axis Bank, which is up about 6% this month, a lot of auto stocks have been the big movers. L&T is your big mover. So it's a secular run that we've seen in the first 15 days of June. In that context, FIIs also have bought quite a bit. In fact, after 2 days of selling, FIIs have come back onto the buying radar, almost 1,700 crores of cash market buying by the FIIs, while DIs sold a tad bit, about 200 crores. So the flows are also positive, indicating that this market will move forward. Now, if you look at the global markets, it's a 14-month high that most global markets are sitting on, whether it's the Nasdaq, the S&P 500. We had a very strong run on the Dow yesterday. US inflation has hit a 2-year low. Now, a CNBC survey indicates that 91% of the market participants are expecting a status quo from the US Fed this time. And majority are also expecting the Fed to pause until the November policy. So there's no move expected on the Fed until the policy in November. At least that's what the expectations are. So let's see, as Prashant was also pointing out, the mid-cap stocks, I guess, will be in focus. They'll continue to be on the buyer's radar. Real estate stocks have been hitting fresh 52-week highs. There are some brokerage reports from the likes of Motilal, Oswal, etc. on Oberoi Realty this morning, so we'll focus on that. But in general, if you look at it, the momentum has been intact for the bulls. And it's just a matter of time before, I guess, new highs get taken out.
Well, that's right. I think the bulls have booked a date and they're saying this week we're going to go to those all-time highs, and hopefully the Fed supports them. Yesterday, there was a Tuesday expiry effect phenomena that played out because the Nifty Financial Services Index and the Nifty Bank, there's an overlap of stocks between them. Both of them in the last hour, they moved up. And that's because the Nifty Financial Services Index played out expiry in favor of the bulls. Now, institutions, they bought more than 1,000 crores. You like that number to stay in that vicinity of around 800 to around 1,200 crores. Or we have seen that the market gets support out there. Just one more data point. If you look at the Nifty 50 stocks, the total delivery on a day-to-day basis is anything between around 12 to around 14,000 crores, very, very roughly. Now, Axis Bank, the stock is at a 52-week high. And on a day-to-day basis, I'm just looking at it, it's not that big a weightage. It's the 10th place in terms of weightage on the index. And it's accounting for nearly around 9 to around 10% of the total delivery on the Nifty 50 stocks. So just keep an eye out on that stock. That seems that there is some institution that's tanking up. In fact, last week it was more than 10%. It was the highest delivery, delivered stocks from the Nifty on a couple of days. So that's why I just thought I'll point that out since the flows have been quite strong. Looking at the FI action, well, in yesterday's trading session, they added some long positions. There was some unwinding of position that we saw in the Nifty. But the FIs, well, they added some longs and they covered some shorts. Now they're net long with 51% of their positioning on the long side. Looking at the options data then, the 18,700 put, 18,650 put, between them, they added close to around 85 lakh shares. So there is writing that we're seen at those levels. However, the 18,700 call was getting written at will the entire of the past week. Now this week, those bears, they are getting a little bit cautious. Yesterday as well, we saw a big unwinding of the 18,700 call, telling you now there is some panic among the bears. They are fearing we're going to be headed off to all-time highs, and maybe that 18,750 to around 18,800 level may not hold out. Remember, that's the resistance level. Even for today, we're going to be starting off closer to those levels. Last week, we went around that 18,778 approximately. And from there, we did see a bit of a U-turn. So we're going to be opening in the congestion zone, though on the downside, going by the writing we have seen at the 18,600, 18,700 put as well, you have the support level that comes up for you on the screen. Nifty Bank, it needs to hold over the 20-day MA, but I think the last couple of days, it's been going to around 43,850, 43,880, and from there we're seeing a bounce. So that's the crucial support zone. SGX, if we suggest, 50-point bump up. We ended at the high point of the day. I expect that to get sold into, and you look to buy the intraday dip. Don't go and chase the opening. That's the call.
All right. That's basically how things are looking. 50 points higher on the SGX. We'll tell you what's lined up here in the next 30 minutes of trade. So we get you updates from global markets. Jahangir Aziz of JP Morgan will react to the CPI numbers from the US and what he thinks the Fed will do. Our research team will get us the list of top 10 stocks of the day and which way they will likely move. And Sanjeev Bhasin of IIFL Securities will be joining us at 8:30 with his call on the markets.
All right. Well, let's kickstart the show with some views coming in on the equities front. Vikas Jain of CLSA says for May, FII inflows into India was higher than other emerging markets and at a 9-month high. He says big changes to the neutral weight of the benchmark notably influenced relative sector weights of FIIs. He says their overweight in financials fell to a multi-year low while their underweight in utilities, staples, IT and materials fell to multi-month lows. Basically, FIIs moved their relative weight away from financials, industrials, autos and healthcare in favor of IT, materials and staples. Vikas says India is back to being the most favoured market for FIIs.
Okay, well, let's get you some money market views as well. So on the rupee, Kunal Sudani of Shin & Bank says US inflation shows signs of cooling, providing a rationale for the Fed to pause on rate hikes, while on the other hand, a 25 basis point rate hike from the ECB is priced in. For the dollar index, 103.02, the 100-day simple moving average aligns as the first support level to confirm a change of trend, followed by the 55-day simple moving average at 102.55. They continue to watch the Chinese yuan, and for the USD INR, 82.1 to 82.15 to the dollar acts as a support, while 82.5 to the dollar is a resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond traded in a range of 6.97 to 7.04% last week. He says yields moved higher on a hawkish MPC and weaker demand in longer tenor bonds in the weekly auction. He says short covering ahead of the MPC and the US CPI has led to some reversals in bond yields. For the rest of the week, Neeraj says the market will watch out for the FOMC and weekly auction demand. He expects the 10-year benchmark to trade in a range of 6.97 to 7.05% for the rest of the week.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. Anupam Rasayan, Zydus Life, we have Capacite Infra, Zine Enterprises, Vodafone Idea, Dhampur Sugar, KEC International, and ONGC. They have stocks on the back of positive news flow, while you have Tata Chemicals and Balkrishna Industries that could be reacting to negative news flow.
All right. That's basically the view out there. Jahangir